The trading floors of the major stock exchanges and the forest floors may seem worlds apart, but decisions made by investors have consequences that ripple around the globe. They can be a powerful force in helping to protect and restore our forests and limit global warming to within 1.5 degrees.
The financial sector is, of course, at the heart of the entire energy and land use sector transition, for the simple reason, whatever gets financed gets built, or whatever gets financed gets grown.
This last year has shown what's possible, with trillions of dollars of net zero commitments from financial institutions. But we mustn't stop there.
Agriculture is the biggest driver of tropical deforestation. Financial institutions provide the trillions of dollars of finance needed throughout agricultural supply chains to enable the production, trade, and use of commodities around the world. How this finance flows is critical to the future of forests and to communities.
So just like we have to take carbon out of the energy sector, we have to take deforestation out of the food system.
So what is the international financial system doing to tackle forest loss and degradation?
One of the key priorities is to ensure that financial institutions fully understand the land use sector is part and parcel of climate risk.
By 2050, nearly 40% of cropland could be exposed to severe drought, leading to large declines in yields. This poses a risk to food security and ultimately to investors. There are also legal and policy risks. Secondly, financial institutions are already taking decisions to manage risk and align their portfolios to support a nature-positive economy.
We need to make sure that they are managing climate and biodiversity risks, including risks associated with deforestation. But we also want to make sure that our investments, our insurance underwriting practices, do not add extra pressures.
Finally, there are hundreds of trillions of dollars of global capital that could be further mobilized towards a net zero, nature-positive economy. These investments could boost productivity, create new jobs, and secure incomes for millions of people worldwide.
O nosso propósito maior: produzir alimentos de uma forma sustentável, socialmente correta.
Moving forward, we will need a better understanding of the value of nature's services to help inform financial and economic decision-making.
Financial institutions will also need the right tools and data to analyze and manage risk in the sector, but also bolster and seize opportunities to invest in forest-positive economies.
As policies create the enabling conditions for sustainable finance, so the opportunities and incentives to scale investment in the green economy will grow.
E eu acho que a parceria maior está junto às grandes empresas, que consomem, também fazer o diferencial. Vir buscar a história, a rastreabilidade dos produtos produzidos e de que forma eles estão sendo produzidos.
The business case is clear.
Now is the time for action. Now is the time for those watching this to be the necessary heroes of today and lead the world into a deforestation-free financial sector.
So, let's get to work.
Good afternoon, everyone, and thank you so much for joining us today for this panel into increasing private investment into nature and land use. And as I think was set out really eloquently in the short film that was just shown and really underlined as never before here at COP26 in Glasgow, the protection of nature really has to be at the heart of our battle against climate change. In fact, there's no way to keep global temperature rise below 1.5 degrees without investing in nature, protecting nature, restoring nature. I hope you're all as excited and inspired as I am by the commitments that we've seen so far in COP towards protection of key ecosystems around the world. So I think the Glasgow Leaders Declaration last Tuesday, a commitment to end deforestation, to halt and reverse forest loss by 2030, certainly made my week and really makes me hope that we've reached a tipping point where we can start to change the path from destroying nature to investing in it. But we know these commitments have been made before, and what makes me really hopeful that they will stick this time is that this time they came with cash. So we saw commitments by governments to, I think now it's reached around $12 billion of public commitments to invest in tackling deforestation, which is really important. But you know, what we also saw was a really historic commitment from over 30 financial institutions who are responsible for assets of a, to me, staggering $8.7 trillion that they're committed to move away from deforestation in their portfolios, which I think is what really signals a change that we haven't seen before. The time really has come to put our money where our mouths are, and you know, public finance cannot do this alone. It's dwarfed by private finance, and we will only really make the change that we need once we mobilise private finance to invest in nature. And I'm delighted today that we've got a panel of experts who do the financial mobilization for nature every day in their day jobs to talk to us about their experience and the challenges and the opportunities that they see. So firstly, we've got James Mansfield from Finance Earth, who's a UK fund manager working with partners to design and structure funding models that deliver for nature. We've got Victoria Oyafe-Dua, who works at Partnerships for Forest, which is a UK climate finance programme providing grants and technical assistance to support sustainable businesses to access private finance. We have Nano Cleartep from AndGreen, who's a private sector fund manager. And we have Henry Gonzalez from the Green Climate Fund, which is the multilateral development bank with a really important private sector facility. Let me wrap up the introduction just by giving you a sense of the flow over the next 45 minutes. So first, I'm going to ask each of our distinguished panelists to set out and summarize the work that they do and how it contributes towards mobilizing private finance for nature. And then I'm going to go around each of the panelists again and ask them to talk about, firstly, the challenges that they see, but then so that we don't get too depressed, to end with an opportunity that you see for the greater mobilization of finance. And then I'm going to ask Floor, who's joined us from the FMO in the Netherlands, to give us a short presentation on mobilizing finance for forests. And Nano will wrap up for us by responding to that presentation. And then I will finally wrap up, and you'll all be free to either go to lunch or go upstairs and watch a short documentary clip, or possibly even both. But yes, thank you for coming. And without further ado, let me turn to James. Can you tell us what you're doing to mobilise finance for nature? What's the market like in the UK with respect to investing in nature-based solutions, and how are you working with the UK government? Over to you.
Thank you, Emma, and it's a real privilege to be here. And Finance Earth has existed for 5 years, helping to connect the world of finance with the world of conservation. And we really operate at a really sort of, I guess, quite privileged area, linking money into real conservation programs on the ground. And actually, in the previous session, it highlighted, the previous session was on indigenous communities, and it highlighted many of the issues that we see, even within the UK, and we operate both within the UK and internationally, helping to bring projects to the point of investment and critically investment readiness. And what we see through that journey is that often partners lack the technical understanding, the technical skill sets to actually empower themselves. And actually a lot of the work that we do is to lend our skill sets to those organisations, to those community groups, so they can actually understand how to best maximise their assets, their resources, and maximise the benefit that's retained in those local areas. The UK has been doing some amazing work, and earlier this year they launched the Natural Environment Investment Readiness Fund. One of the biggest barriers we see both within the UK and internationally is that skill set creation and creating the right type of funding environment that allows projects to trial new models, to innovate. How do you create the revenue streams? How do you create the right governance models, particularly when you're looking at landscape scale transition and seascape scale transition? And what the Natural Environment Investment Readiness Fund programme is providing some of that catalytic money to pilot and innovate and support with the costs of setting up some of those really impactful models. And actually, I think there's a new wave of that coming through now, and it's really exciting to see the various projects which are sort of bubbling up through that support program. I guess we work through those with partners primarily as an investment advisor, but then at an appropriate point and where it's appropriate to do so, we also structure products and structure funds to help organisations scale beyond their financial means as an organisation by themselves. So I'll leave it there because I'm sure there's a lot to be said on the panel. Thank you.
Great summary. Victoria, can I move to you now to get a bit more of a sense of how this experience differs by country? I know you do a lot of work in Central and West Africa, and how does the Partnerships for Forests model work to shift industries towards more sustainable production? Over to you.
Thank you, Emma. And just to say, I'm really delighted to be here today to speak about what we do at Partnerships for Forests and how we can all work together in order to address this challenge of deforestation. So Partnership for Forests is an 8-year UK government-funded program managed by Palladium and Systemic, and operating in East, West, Central Africa, Latin America, and Southeast Asia. Essentially, our objectives are to catalyze investment from private sector into forestry and sustainable land use. Our goal by 2023 is to have unlocked private capital of about 183 million pounds, and also bring 1 million hectares of land under sustainable management. The way that we operate is we provide technical assistance and grants to what we call forest partnerships. And these are partnerships between the private companies, public sector, and also the people who rely on the forest for their sustenance to deliver positive environmental, social, and economic outcomes. We also support what we call enabling conditions and demand-side measure, and this is essentially to address the critical barriers to companies achieving their deforestation-free commitment, and also to companies and supply chains producing deforestation-free products. As it is now, in terms of some of the impacts we've been able to achieve on the program, is we've been able to already unlock private capital of about 250 million pounds, and also brought 2.2 million hectares of land under sustainable management. We have 60 forest partnerships and have been able to provide social benefits to about 50,000 forest people. Just to give a flavor of some of the projects that we are currently supporting and how these have been able to drive transformation. So I'm based in West and Central Africa. So for example, in Cote d'Ivoire, we're working with Mondelez to drive the production of sustainable cocoa whilst providing incentives to communities and cocoa farmers in the form of PES for landscape restoration and also forest conservation. We also are supporting the Cocoa and Forest Initiative. So I'm sure most of you have already heard about that, but it's basically a joint action framework between the government of Ghana and Cote d'Ivoire and 33 chocolate and cocoa companies to deliver sustainable and deforestation-free cocoa. The same in the oil palm sector, but in this case with 10 African governments trying to drive the production of sustainable and socially responsible oil palm production and trade globally. I'll stop here and then can come back to add more. Yeah.
Thanks so much, Victoria. I'm hoping you were in the Fact Dialogue launch this morning.
Yes, yes, I was. I've been involved in that as well in Africa, facilitating the dialogue between governments.
Yes, it's so important. Thank you so much. So next, Nano, let me turn to you to ask about AndGreen's work in tropical forested countries.
Thanks very much for this opportunity. So AndGreen was created about 5 years ago. Well, we started, let's say the creation took some time. And AndGreen is focused on making the supply chain of the big commodities deforestation free. So basically then we're talking about palm oil, about soy, about meat, about rubber, could also be coffee and cocoa, and doing that through the private sector and creating scale, because we think it's really important to create scale, to have impact and be transformative, that really we change the way in the supply chain, the ways of production, and stop deforestation. Our goal is to restore and preserve 5 million hectares, to include about 500,000 farmers, and let's say to get to a fund in the coming years of 400 million, and mobilizing 2 billion of other funding from other companies, from institutional investors, from the enterprises we work with. I think an important aspect of what AndGreen is doing is the jurisdictional approach. So we can only operate in areas where there is a landscape protection plan, where there are real targets on stopping deforestation, and where those targets can be monitored. I think that is all very key, because then we are embedded in a government policy. We are a government policy that is, let's say, created together with private sector, together with NGOs, together with civil society, and government, of course. There are other institutions which are doing a lot of work there, like IDH. Dan Wensing from IDH is here. They are very helpful in that approach. Of course, we are focusing very much on the investment, but all the things around it are key for the success. We, at this moment, and after the end of this seminar almost, we have about 200 million of funding, and about 100 million invested in 4 transactions, 2 transactions in Brazil, 2 transactions in Indonesia. And maybe to give one example of a transaction in Brazil, we are working with the 2nd largest meat producer in Brazil, Mafrique, which is really a big company. And we are financing Mafrique in order to make their supply chain deforestation free. And then we are talking about more than 90,000 suppliers, medium-sized, smaller-sized livestock companies, helping them to intensify their production and to avoid that they deforest. Similar transaction in another commodity, in palm oil, we have done in Indonesia. That was the first palm oil deal financing from a development finance institution in 25 years in Indonesia. So you see how needed it is, and how let's say, how big a risk and how careful even the development finance institutions are in that area. And that's similar. They have thousands of suppliers, small-sized farmers, medium-sized farmers, and they will take care of that their whole supply chain gets deforestation free. We provide loans, long-term loans, which are not available to them, 10 to 15 years to make this possible. Let's say most companies approaches part because of the money and part because these are difficult processes and they want to have, let's say, a fund that accompanies them in reaching this and how to measure it, how to structure it, and how to organize a better supply chain.
Thank you so much, Nano. And for the end of this first round, Henry, let me come to you and ask you to talk about the work of the Green Climate Fund's private sector facility over the last few years.
Thank you very much, Emma, and thank you to the UK government, which is a key partner of the Green Climate Fund. I'm also very happy to see several partners here who we are working also as implementing partners of what we do. The Green Climate Fund is today the largest multilateral climate fund in the world. Our over 180 transactions accumulate $37 billion. Out of that, we have committed $10 billion. And we are able to work in both public sector and private sector. And our goal is indeed to play a catalytic role where we're able to de-risk in order to have the private sector come in, or we're able to also bring different capital or different financial products in order to make that transaction possible. So really at the core of what we do, and we were created as a financial mechanism of the UNFCCC, we want to take the deepest risk possible, and we want to be the catalytic in order for this to scale and to bring new capital providers who are not able to take those risks because of fiduciary responsibilities, or because we might be working in very frontier, not yet bankable areas of different parts of the ecosystem. In regards to nature, we currently have around $2.5 billion that we have invested in different projects, and we work from forest and land use to ecosystem and ecosystem services, food, agriculture, and water. So we are really expanding that area. Those are some of our priority areas. And we are trying to really innovate, and sometimes I would say provide a demonstration effect that some of these things are possible and they are profitable, and they are also indeed helping people and planet. So in the last board meeting that we held in October, we approved several projects that are indeed in this area of nature. One of them was the Coral Reef Fund, which is an investment window that is going to be a $500 million private equity fund. We provided 25% of that, $125 million, in order to really create an opportunity to work in sustainable oceans, in sustainable ecotourism, and also in water treatment, and also working with resilient infrastructure. This is a project working in 17 countries that includes small island development states in Africa, the Pacific, and the Caribbean, but also countries in Latin America, Asia, and Africa. So we are really trying to pivot a lot of our investments into adaptation, and working a lot with least developed countries, SIDS, and African states. Regarding how we partner, we try to work with the whole gamut of private sector investors. So we work with development financial institutions like FMO that is here. We're going to be listening from them. We also work with private equity funds like Pegasus Capital Advisors, who is the fund manager of the Coral Reef. We also work with impact investment managers like Acumen Fund. We also work with local financial institutions in different parts like EcoBank in Ghana. We also work with global banks like Deutsche Bank, HSBC, Mitsubishi. And we also work sometimes with NGOs or with other entities, social enterprises that are also engaging in attracting the private or the public sector. I lead the private sector facility, so we are mostly working with the private sector investors. Out of the 10 billion of our capital that we have committed, 30% of that has gone into private sector initiatives, and we hope to grow that. We're trying to really work in local financial markets, also trying to help mature capital markets in some of these countries, working with green banks, working with climate debt swaps, working with guarantees. We're also trying to work a lot more in new products, de-risking, by more junior equity, and also hopefully local currency. So I guess the job is cut out for us because obviously the need is great, but the idea is to use our finite capital in a way that we demonstrate that this is feasible, that we're able to engage the private sector, and really is a journey that we are a young organization. We have been operational for the past 6 years, and already there are 37 billion between co-investment and our capital. We hope to grow that and hopefully do a lot more in nature and ecosystems. Thank you.
Thank you so much, Henry. So now I'm going to come around to you all in a different order this time, so this doesn't get too predictable. So I'll start with you, Victoria, in a minute, and just ask you all to talk about the real barriers and the challenges you see to generating the scale of private investment in nature that we need, and then to finish with one opportunity that keeps you hopeful. So over to you, Victoria.
Thank you. So one big barrier is the fact that deforestation is a collective problem, right? So supply chains are facing that as a shared problem, and so it needs to be addressed collectively. We can't have companies, supply chains working in silos with the aim of solving that problem. So it's important to have collective action, to have partnerships, to have collaborative arrangements in place to get the ticket size that most investors are looking for, because most of the time they are looking for large ticket size projects to invest in. So that is one area that there's a need for more engagement around. It's great to see that with the Nature Campaign COP26 Fact Dialogue, all stakeholders see the need for collective actions. I was in the morning Fact Dialogue where Sainsbury, where McDonald's was talking about the forest positive commitment and the group that they've joined, and the fact that they all see the need for collective action, for collaboration to solve the problem. So there's that opportunity there to see and make changes and transformation in the sector. The other point is about financial support and financial access to smallholders. So smallholders, they are the front and center of the production system, and they need support in order to produce sustainably, in order to scale, in order to build climate resilience, etc. But there are a lot of barriers around and risk associated with giving financing to smallholders. So there needs to be some expectation management with investors, companies, and investment mechanisms to be able to channel greater resources to farmers. There's one way of doing it is looking at the lending rate and having grant funds to de-risk and reduce the interest rate. The other one is looking at the tenure, so the term of the loans, and considering that with agricultural production, forestry, you are looking at patient investment, patient capital. So is there a way of staggering it such that there's a longer repayment terms for farmers? If I do have time, I'll just talk about a third point. And the third point is around landscape governance. So landscape governance, landscape program is also really important. It's the way of also getting impact at scale and also bringing coherence into the sector. So companies, communities, farmers come together to do land use planning, have baseline assessment done, develop monitoring systems in order to assess performance and report on performance against all of the deforestation-free commitments that have been made. Thank you.
And one hopeful opportunity that you see?
So one is the Nature Campaign, the Fact Dialogue, and the fact that companies are all eager to work together to solve the problem. Companies are vertically integrating and putting more investment into bringing solutions and implementing practical actions on the ground. And this is something that there needs to be greater investment channeled into that to be able to achieve the impact.
Brilliant. Thank you so much, Victoria. Maybe Nano, I could come to you next for the same question. What are the challenges and what opportunities do you see? Thank you.
Yeah, thank you. Well, challenges, maybe to look at in perspective. The first challenge, of course, was to start a new fund and to get the support, and we got the support from NICFI, from the Norwegian government. We started the fund together with IDH, and then Unilever came on board, FMO came on board. So those are very important steps in a process which, you have to convince the people while you haven't done anything yet, but you have the perspective of starting. And then the second challenge was, of course, doing the transactions, because there was a lot of skepticism. Well, all these, all the conditions you have on stopping deforestation, complying with IFC performance standards, you name it, measuring it, make it transparent. Nobody will want to work with you. So there was a lot of skepticism. So we are very glad that we did 4 transactions and have proven that the model works. So that is, I think, very key. And now I think the big challenge is getting to scale. No, we really want to get to $1 billion under management. Of course, later on more, but step by step. And that's a big challenge. Therefore, it's very important to have the blended finance structure that we have. So with the support now also of the UK government, that we have, let's say, a portion in the fund which can take high risk. No, so that makes it us able to attract also for more commercial investors. And in the first phase, the costs are relatively high. Also our interest costs are relatively high. And the blended finance makes it also possible to lower that cost. So that challenge, that brings us further in convincing companies to work with us. And then the challenge is to find more companies that want to do it, and that's on the and get more funding. So the 2 positive things I would like to say is, first of all, I'm very optimistic. Now I heard Henry, and so we are going to approach the Green Climate Fund to help us to go on further. And we are in discussion with some institutional investors. So we see that there already is an interest in institutional investors, although we, of course, are a very high risk proposition. And at the same time, we see, and you see that here and you see that everywhere, that companies, commercial companies and companies in the supply chain are taking more and more and are aware more and more of their responsibility. The challenge is there to convince them to do that publicly, to do that transparent, to measure the impact they have, to measure and get a common, let's say, framework of measuring that impact. But we see more and more companies that are willing to do that.
Wonderful, thank you. And the opportunity, Nano?
Well, these were these were the opportunities. Those companies and GCF one.
Okay, and I'm glad that we're facilitating kind of partnership building in action here on the panel today. Henry, let me come to you next, and then James, you'll have worked out. I'll finish with you.
Thank you. I think what my predecessor speakers have said, I think I agree, and we face some of those challenges. But if I were to look a little bit, I believe one thing that is very important is implementation and action. Because I think closing a fund or raising a concept, I think it's not the most difficult part. The most difficult part is how do you bring that to action, and how do you bring that also in an impactful way to action. So I think for us, we have committed, as I said, about 10 billion, but we've only disbursed about 30% of that. It takes a while. And we are indeed patient capital providers, so we're not in a rush to exit tomorrow, and we like to partner with other like-minded investors. But it's really important to help countries also develop more conducive investment environments and to develop a systemic approach to these investments. And I think sometimes we need to really come with a bundled approach where we bring capital and technical assistance or grants to help some of those countries. At GCF, we have 2 windows that we try to use. One of them is called readiness, where in the early stages of an idea or of a country program, we could give up to $1 million per country that we work with in order for them to bring their standards to be able to, make our project the most successful as possible. And this could be, in different ways. We really demand our partners to have evidence on the climate rationale and the impact of our investments. And I think that is just part of our fiduciary responsibility. And sometimes we need to use some of those resources. We also have another window, which is the project preparation facility. So that is another opportunity. That's a window between $500,000 to $1.5 million, depending on the size of the project, where we could provide that capital early on to align our countries, to align our partners, to align everyone that we're working in order for us to then develop that financial proposal in a robust way and with some of those baselines that we may require. So I think that challenge of working in creating more conducive investment environments is very important. The second one, if I may, is around the capital providers. And I think this is very important on how our providers of private capital assessing risk and assessing that tripartite of risk, reward, and I would add impact. Because sometimes, and this is something that we avoid, we want to partner with a private provider of capital in a way that this is a mutually positive relationship, not in a way that we are subsidizing someone who wants to get a higher return. I mean, we're here to de-risk, to allow the investment to happen, to allow the transaction to be profitable, but we're not here to maximize profits for those that will be benefiting from what we would like to give. And sometimes working on the capital structure and asking some of the investors to perhaps take a haircut if they can, in order to make the transaction possible, is challenging. And this not only happens with private investors, it even happens with DFIs. And sometimes the DFIs are the most commercial ones and the more difficult to work. Not all of them, but some could be. And also the private sector players could also have some of this, but I think some of it, and this is a little bit maybe the opportunity angle, is there's also lack of trust, because these are new partnerships. We don't have a very large track record. We're working in frontier markets. We're working on unproven business models. So we also need to understand that they need to really, protect the downside. And that's where we would like to come. I mean, the level of concessionality that we give is related to the risk of the project. So while we're not yet providing local currency facilities, we hope to work on that. We sometimes would like to bring investors to work in hard-to-reach countries, and if we're not able to provide the local currencies hedge, we at least will take into account the cost of that hedge in the concessionality. So we try to somehow provide that opportunity, but I believe if we're able to have a better risk-reward alignment and make sure that everybody has the alignment on the impact right on, I think that would be a great challenge to overcome. But I'm really hopeful because I have to say, thanks for this request of partnering. We have had non-stop meetings where we are being approached by institutional investors, by full-fledged private mainstream investors, and by impact investors on ways to work. And this is something that 2 or 3 COPs ago was not real. And also the presence of private sector. And I really want to give it to the UK presidency for making this a more inclusive COP, where it's not just the negotiating bodies, which are very important, but it's also those of us in the ecosystem that allow some of that to happen. So I think that is, for me, it's refreshing. But we hope our donors will give us more money, because I think the demand is just going to increase. But I think this is a great opportunity of alignment. And also today, and I want to go beyond pledges. I want to go into action. I think there are a lot of investors that have already embedded ESG and impact investing and climate investing as part of their investment strategies. So it's no longer a niche, it's being mainstreamed, but we also need to do it in a cautious way in order to make sure that we remain focused on the end recipients of the investments, and also making sure that we are delivering on the impact that we are saying we are, and avoid impact washing or greenwashing. Thank you.
Thank you so much, Henry. And James, over to you to wrap up the panel.
Thank you. So I guess just to give some of my insights from being I guess, very close to some of the details that my co-panelists are alluding to. And some of the really practical issues when you start to look at how do you finance the protection and restoration of nature is that natural systems, almost by their definition, are very localized, very, very bespoke systems. And because of that, the way that you then approach a business model, a cash flow model for that system is sometimes very, very different when you look at different areas and different regions. And that leads to, by its very nature, a very complex set of financing arrangements, and critically, how do you build those revenue streams and cash flow streams that ultimately you can create a financing structure around. And I think some of the other practical sides, and actually exactly as you were mentioning, is around how do you create these systems that then are governed effectively in local regions. And one of the sort of major barriers that we are starting to see as we are starting to see some very significant sums of capital being committed, and we absolutely need to strive for scale and rapidly. But we need to do that without deviating and losing quality. And there's a real risk, actually, as we start to accelerate these models and grow some of the solutions that are operating at sometimes quite micro or medium scale stages, and actually when you do start to expand those, that there are issues that just simply hadn't come out of the sort of the woodwork as you come through. So there's a sort of an issue there around how do you assess quality. And I actually think the finance market and finance providers have a really important role in helping both project developers, the community groups, and also the NGO community and the scientific community to really assign and work out what does quality mean? What are we actually trying to aspire to with these landscapes and seascapes? And how do we ensure that the projects that are being created don't just serve and actually serve the finance and serve the sort of the transaction, that actually they are truly sustainable for that local community and are embedded for the longevity of that area. And so I guess there's some of the practical things that we've been grappling with, and as I think the whole panel have said, there is an amazing amount of energy at the moment, both within the private sector, the public sector, and the NGO community, around how we can find solutions to these problems. And I guess the sort of some of the exciting things that we're seeing is that a lot of the models, particularly in the sort of global south, has been driven by carbon markets, and clearly many of the voluntary carbon markets are the most monetized, most sort of at-scale solutions that we're seeing. But with the TNFD, with the increasing awareness that natural systems is more than just carbon, actually there's this also increasing awareness of the whole market, that we can't just drive solutions by carbon outcomes. And for me, that's one of the really exciting things that is happening, that both within the investment community and clearly within the sort of developer NGO community, there's this recognition that those models that are beyond carbon are as important. And actually, if we're going to make models truly sustainable, we have to unlock those. So I'll leave it there.
Thank you so much, Jamie, and thank you all of you on the panel for such a rich discussion. Let me move on to the next segment of this session now, which is to ask Floor, who's joined us after a truly kind of heroic journey by ship from the Netherlands, from the Netherlands Development Finance Institution, FMO, to give present a short video and presentation on your work. Over to you, Floor.
Thank you. Hello, my name is Floor van Oppen. I work at FMO, and I'm responsible for the Mobilizing Finance for Forests program. We have a short video to show you, which should be starting.
At a global scale, climate change is the defining crisis of our time. Global temperatures are rising as a result of billions of tons of CO2 being released into our atmosphere. Forests are the most important storehouses of carbon and play an imperative role in controlling and stabilizing our climate. They play an integral part in the carbon cycle, regulate ecosystems, and protect biodiversity. 1/3 of Earth's land is covered by forests, around 4.06 billion hectares, of which almost half, 45%, are tropical rainforests. It is estimated that the current deforestation rate is around 10 million hectares annually. Tropical rainforests are particularly vulnerable. The UK is committed to tackling climate change and has pledged £3 billion of international climate finance towards nature and biodiversity over the next 5 years. But public finance is not sufficient to shift the sector towards more sustainable practices. It's crucial that we also mobilise private finance at scale. This is why the UK government launched a flagship programme called Mobilising Finance for Forests, with the mandate to increase private sector investment to combat deforestation and other environmentally unsuitable land use practices that contribute to global climate change. The fund capital aims to invest to £150 million and will use blended finance to mitigate the cost and risks of investing in the sustainable forest and land use sectors. It will focus specifically on increasing the value of standing forests and on incorporating forest protection and restoration into sustainable forms of agricultural production. The UK government have chosen the Dutch development bank FMO as its delivery partner to implement the programme.
FMO welcomes the Mobilising Finance for Forests programme, a pioneering initiative which is aligned with our own forestry strategy. Development finance institutions form a critical link in the mobilization of public and private capital for forestry finance initiatives. They have the potential to catalyze the sector to new heights. At FMO, we see the sustainable forestry and land use sectors playing a pivotal role in achieving our climate and biodiversity goals. I am of course immensely proud that the UK government have selected FMO as their delivery partner to execute the MFF programme. FMO will, through its network, reach and reputation, be able to select a group of experienced fund managers who will apply their knowledge to the tropical regions of Latin America, Africa and Asia. With their skills and by working directly with forestry clients and deforestation-free commodities, we will mobilize additional private sector investments, further develop these sectors by addressing gaps and set them on the path of commercial viability on a global scale. We are fully dedicated to the success of the programme and are looking forward to working with the UK government.
Okay, so we've heard a lot about the market, so I would like to give you a little bit of insight on how we've set up the program. So I'm part of the FMO Blended Finance Department, and I work together with the investment officers in our private equity and debt departments. For every transaction, we set up a deal team that also has an important role for our environmental and social colleagues. They do very long, very deep due diligence on our investees. Now, for the program, we're selecting 3 to 5 fund managers to invest around 80% of our program. For these as fund managers, we select scalable opportunities. And we've seen also that in each of these fund managers, our expectation is that they will need concessional finance to get to private sector mobilization. So we expect that FMO can also play a role as the accredited entity for Green Climate Fund to include them in our fund managers. A pocket of 20% will also be available for FMO to do our own direct investments. And just as a second slide, we have within the program defined 3 products that will be available to all of the investees. The majority of the funding will go into capital investment, whereby the MFF program can take a higher risk than other potential LPs, so that we can take away some of the risks for the more commercial type funders in order to mobilize private investments. Up to 20% of the program will also be available to develop projects, to make them bankable for our fund managers. We allow this funding to be used to develop projects together with local NGOs or local capacity builders to ensure that the projects become bankable. And then we have up to 5% of the program available for technical assistance, and this is to increase or to accelerate the impact of our investments. Now, I'm really pleased to tell you that we've been working on selecting our first fund managers, and it is our intention to make our first commitment within the next few days. And that commitment will be $33.25 million as a concessional tranche to the AndGreen fund. So I'm very pleased about that. Thank you very much.
And we're also very excited in the UK government about this investment from the Mobilising Finance for Forests programme. So thank you so much, Floor, for making this exciting announcement today. Over to you, Nano, for the last word.
Well, thank you very much.
Nearly the last
Well, of
word.
course, thank you very much to FMO and the UK government to select AndGreen as one of the first investment of the Mobilising Finance for Forest. I think it's well, it's easy to say now. I think it's a spot-on instrument, but really, no. We've heard how difficult it is. So you need instruments, you need blended finance, you need the startup cost you need help in the startup cost, and you need technical assistance. So I think it has all the elements which are really key to make, let's say, investment in forest and stopping deforestation work. So thanks very much to the UK government, to FMO, and to everybody who has made it this possible and has made AndGreen possible. Thanks very much.
Thank you so much, Nano. And I'm just going to bring this event to a close now. Thank you all for attending and for joining us. And thanks particularly to our four panelists and to Fleur as well. I don't know if you all caught the short video that played at the beginning of the session, but Richard Curtis talked about the necessary heroes that we need to mobilise the finance to protect nature in the world. And I think it's fair to say that we have 5 of those necessary heroes with us here today. So thank you so much. As you leave, if you're interested, there's a short trailer playing for the Partnerships for Forests documentary upstairs. But no, I feel really inspired by this session, that we're at the start of a real shift. So thank you so much, all of you.